firstly, we're a broad church in terms of employees and clients, support a wide variety of parties. But you have to say, if you look at the facts, a probability of a Labour majority is a very, very low probability.
What about a Labour-led coalition as a potential scenario in a hung parliament that could lead to higher taxation?
So that's a potential scenario, but again, it's a low probability when you look
that's
at
what
least
Mrs. May said 2 years ago.
Yeah, true. So, but we, as an investor, we have to weigh up the probabilities here.
Yeah.
So
you think a Tory majority is the most likely scenario at the moment?
That is based on where the bookmakers are today, and they're not always correct, but traditionally they've been more correct than opinion polls. So yes, one. Two, sterling, UK equities, especially domestic orientated UK equities, are very cheap, huge outflows and hated asset class, whether you're looking at the Bank of America or Merrill Lynch survey or just flows. So the way we look at it is that if we have the scenario of a Conservative majority, then kind of as expected, but probably a relief rally. In contrast, your scenario, hung parliament, there could be some downside, but downside in a cheap currency, a cheap asset class, it would be rather limited.
Okay, we'll get another question, but just as my link to you, there is a very real scenario that if we get a Tory majority, which is looking at a harder Brexit-type party as well, there is a real clear and present danger that in December 2020, there is a falling out with no deal because of the trade scenario is a concern. That is, again, what many people fear.
I was going to make the same point to Alan, which is, do you get that rally in sterling and the market for a couple of days, and then everyone goes, what now? And then it comes to Steve's point, which is, oh my goodness, we're starting the negotiations. This Brexit thing never ends. We may have a hard exit by the end of next year.
Could do. Unlikely, though. A trade deal, you have to think it's a bit like the US-China trade deal. It's mutually interesting for both sides, right? If you look at it, so it'd be a big surprise not to get a trade deal within a year. And it's not. People point to Canada, but it's so different from Canada, because obviously the UK and Europe is alike. The starting point is so different. So,
but you're going to have a lot of headline risk, aren't you?
There is some headline risk. So you're right. You may need to fade this trade Q1 next year. But on any measure, sterling's undervalued. You see that in terms of flows. You see private equity interested in a lot of UK companies. You see commercial property. At Coutts, we're even seeing some interest in residential property from dollar-based buyers. So that dollar discount, if you like, or sterling dollar orientated discount. So I mean, look, that's the way we've orientated portfolios. Let's see how it works out.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.